Hello and welcome to this YouTube channel. My name is Khosrow Sokhanvar, presenting to you a free course of price action in market cycle methodology. In the last episode, saw some very basic concepts and introduction about those basic concepts. In this episode and the next few episodes, go in detail basic concepts because they are fundamental to go through market cycle methodology. First, I have to say that this course will be useful for people no knowledge about financial markets, and also for people who have already about financial markets but their trading strategy is not profitable. I highly recommend to people who have already a profitable trading strategy not to change their strategy, but watch these videos. Maybe it helps them to improve their win rate. So get started with some basic stuff. Okay. First, go to tradingview.com. It's our tool to watch the charts and do our technical analysis and analyze the market. Okay, here is the first page of this website. Here is my watch list. You won't see it unless you create your own. Here you can search the symbols. Symbols are mostly 3 letters. This one, XAU, is gold. You can type it here and you can search it. XAU is gold against dollar, USD, US dollar. BTC or Bitcoin against USDT or US Tether, which is dollar. ADA or Cardano, which is a cryptocurrency, or Euro against USD, and so on. You can search whatever. Or USC, which is Dow Jones Index, and many other things that you can search. For example, USD CAD. It's US dollar against Canadian dollar. Let's launch one of them. For example, Euro USD. Here you see the exchange or broker that is providing this pair for trading and the chart. Okay, it's Forex. When you launch it, you see something like this. I already prepared chart from a broker which is FXCM. Here you can see the name of the broker, the symbol. Here you can change the time frame, and here you have a toolbar that you can use it to draw objects on the chart. Like there's a line you can draw. This is the zone or horizontal lines, vertical lines, and you can also add a text here. Here you write your text, for example, something, and it will be added here. And also you can draw that you will see we use too much like this. You can draw a pathway, click on anything and remove it. Or you can remove all of them by clicking here. We are seeing something like this. What is it? Let's zoom in. We already learned we use candlestick chart. When we choose a time frame, like for example, here is 15 minutes time frame. What does it mean? It means that each candle here represents the price movement in 15 minutes, in a period of 15 minutes. If I put it on daily, and you can double click here to adjust the chart, each of these candles represents price movement in a period of 1 day or 24 hours. Okay, let's go to 5 minutes. So each candle represents price movement in 5 minutes period. For example, this green candle, let's see how has been the price movement during this 5 minutes. We already learned that when it's green, it shows that the price has gone up during that 5 minutes. So the open is here, the close is here, high is here, and the low is a bit lower than. What do they mean? It means that in the beginning of that 5 minutes period, the price has been 1.05714, and at the end of that 5 minutes period, the price has been 1.05750. But during that 5 minutes period, the price has gone as high as 1.05758 and has dropped as low as 1.05712. Was this candle? Let's see another candle. For example, this red candle. It is red, so the price has dropped during this 5 minutes period of time. So the open price is the higher price. Close price is the lower price. So open, close, high, low. It means that in the beginning of this 5 minutes period, the price has been 1.05 707. At the end of this period of time, the price has been 1.05697, and during this 5 minutes, the price has gone up as high as 1.05714 and has dropped as low as 1.05692. See other examples, this candle. Okay, it's green, so the open price is the lower price. Those price is a bit higher than the price in the beginning of this 5 minutes has been 1.05922. At the end of this 5 minutes has been 1.05923, and during this 5 minutes as high as 1.05946 and has dropped as low as 1.05909. So we already saw 3 examples. So now we know that what we see on the chart, many of these candles representing period of time that we decide. What is it? 5 minutes? We can use 1 hour, so each candle represents 1 hour. Now we zoom out and we see something like this with too many candles. To analyze the market, we watch the chart from zoom out perspective like this, and to enter to a trade we zoom in because we need to see these candles and what is happening exactly in that period of time. In the introduction video we saw the concept of support and resistance. Okay, we said that a support zone is a zone in which the price has been pushed up at least 2 times, like here, for example, this zone 1 time, 2 times, and then when the price goes to this zone for the 3rd time, we expect the price to go up again. Resistance zone is a zone of the price in which the price has been dropped at least 2 times. This, for example, this. And when for the 3rd time the price hits this zone, we expect the price to drop. And also we saw a resistance zone like this, for example, is crossed by the price. We will see support resistance reversal or change of the character of that zone. It means that it will not be a resistance anymore. It will be a support. When the price goes down to this level, it acts as a support. Why? Because many people here in that time when the price was here saw this resistance and decided to sell in hope that the price will drop, but it didn't. It means that these people who sold here are in loss. When the price goes back to their entry price, their profit and loss will be 0, so they close their position with 0 profit or loss. When you close a sell position, it means that you are opening a buy position, so there will be buy pressure here. There will be imbalance between supply and demand, so the buy pressure will be here and push the price up, and vice versa. When we have a support but the price cross it, doesn't respect it, it will be a resistance after that. So it acts like this because people in hope that price will go up again here, but they are in loss when the price drops. And when the price goes back to their entry price, they will exit their position. So if you exit a buy position, it means that you are selling an asset, so there will be sell pressure here pushing the price down. So we learned change of the character or support resistance reversal. Okay, let's find some examples on the chart. Here is euro against US dollar. Here, for example, we have a resistance zone here. 1 time push the price down, and here again push the price down. So we mark it here 1 time, 2 times, and third time again push the price down, and also fourth time push the price down. And if we also continue it here, we see it has been a resistance here, pushed 1 time, 2 times, the price crossed it, so change of the character, it acts as a support after that. So then again the price crossed it down, so change of the character, it acts as a resistance. So you see that it pushes the price down here, for example, 1 time, 2 times, so it's a support zone, 3 times. When the price crossed it down, it will be a resistance. So see that acted as a resistance. And again, when the price crossed it, change of the character, it will be support again, and support, support, and almost a support. 1 times caused the price to drop, 2 times caused the price to drop. We mark this zone, it was a resistance. When the price crossed it, it will be a support, change of the character. So it pushed the price up again. Here, 1 time, 2 times, we mark it, and third time, it pushes the price down again. And for the fourth time, when the price crosses it, it will act as a support, cross down, resistance. Here, 1 time, 2 times, the price crossed it, so change of the character. You see it acted as a resistance. So we are waiting here to sell the asset. We were waiting here to buy the asset, but we didn't see a signal which we'll learn in the future. We didn't see it, so we didn't enter. When it crossed it and it went back to this zone, we were seller here. Here also there is a resistance. Here 1, 2. Let's see what happened in the future. We go to a higher time frame, and price, it's not gone. That's all. When in the future, if something like this happen, we don't know it's gonna happen. If it happens, we are here to sell. We'll be a seller here because it's a resistance. Here 1 time, 2 times, it's a resistance. 1 time, push the price up, 2 times, we mark it. Almost for the third time, it didn't hit the zone, but somehow it caused the price to pump up. Then when the price crossed it down, it acted as a resistance. Another thing that we learned in the introduction episode was trend lines. We saw that when we have what was uptrend? Uptrend is when you have high, higher high, low, higher low. So the price is forming higher lows and higher high. So high, low, higher high, higher low, higher high again. So we connect these two lows, the first low and the higher low, the second low, and we will have a trend line. When for the third time price goes to this trend line, we expect it to push the price up. So we are buyer here, and it's true for downtrends or bearish trends like this. What is downtrend? It's when the price is forming lower lows and lower high. It's a low, it's a high, it's a lower low, it's a lower high. So we are in a downtrend. We connect the first high to the lower high, and we will have a bearish trend or downtrend. When for the third time the price goes to this line, we expect the price to drop. So we are seller here. But it may happen that the price goes down here and breaks this trend line. We learned already that this zone will be important. This zone is break even. Why? Because many people here were seeing this trend line, were buyers here. So they bought here. When the price goes down, they will be in loss. When the price goes back to their entry price here, they will exit their positions. When they exit their buy position, it means that they are opening sell positions. So there will be sell pressure here. And the opposite is true for downtrends. When the price breaks this trend line, this break even zone will be a support zone and will act this. So we will be buyer here. We will be seller here. Next thing that can happen is that we have a uptrend. This a trend line. The price goes and breaks this trend line, but again goes up. Here we are still in an uptrend because we have high, low, higher low, higher high, higher low, because it's higher than this, and high. In that case, we extend this trend like this to this one, and when the price goes to this trend line, it will be our decision point. We will be buyer here, or if it breaks it, we will be seller in this break-even point, and the opposite for downtrends. Price goes up, breaks it, but drops again. So we are still in a downtrend. Low, high, lower low, lower high, lower low, lower high. So we extend it. And this trend line will be our decision point. If we see signals to sell, which we learn in the future, we will be seller. And if it breaks it, we will be buyer here at this break-even zone. Let's find examples on the chart. Again, we have euro against US dollar in 5 minutes time frame. Here we see have a uptrend. Here high, low, then higher high, higher low, higher high, higher low, and so on. Why didn't we use it as a low? Because the important low is the low that causes the formation of new high, not this low. This low didn't cause it because it's not a new high. It is the new high. So we choose it as a, so if we have something like this, for example, these lows are not important for us because they didn't cause the formation of new high. It's the low that caused the formation of this new high. So these lows are important for us. So we connect this low to this one. Continue here, and we see that it pushed the price up. We extend it because here it crossed it but went up again. Extend it, and we see that it pushed the price up again, but we extend it again, and here pushed the price up, but it had crossed it, so we extend it again. It pushed the price up, and we again extend it to here, and again we extend it. Let's see, push the price up, and we extend it again, and here, and so on. Here also I have a uptrend like this: high, low, higher high, higher low. I remove it to see it better. I connect this low to this low and continue. You see here what happened. Here we have a downtrend. Low, high, lower low, lower high, low. So I connect these two highs to form a trend line. I remove this to see it better. Here we see a fake breakout, so we extend it here, and again here we extend it here. So here, when it breaks it, this break-even point is important, and we see that it caused the price to go up. Here we have a uptrend, high, low, higher high, higher low, higher high, higher low, higher high. You see this uptrend. We connect these lows. We see here it pushed the price up, and when it was broken, this break even worked as a sell point. And so here, this to this here, we extend it, and the break even is the same place. Here we have a uptrend. So I connect this low to this low. We see that it pushed the price up. We extend it here to here, and we see, and we continue it. It was broken. So this break-even point in the future will be if the price goes. We don't know if it goes or not. If the price goes to this zone, we will be seller here. If we see sell signals, which we will learn in the future. Here we have a uptrend, low, high, higher low, and higher high. We connect this two, and we see it worked for the third time. We extend it, it worked again. We extend it again to here, and this break-even is important, and we see that it acted as a resistance. And so here we had a support which acted as a resistance after breakout. Here low, high, higher low, higher high. We connected here. We also have a trend line here, and we see that this break even almost didn't work. Okay, why it didn't work? Because we already saw in the introduction that we are not 100% sure. We are not 100% correct. We just have a win rate. We are not always true. So we can have profit, we can have losses. We adjust it to our win rate. We manage our risk. We manage our risk to reward ratio to have a profitable system after many trades, not just for one trade, not just for two trades. And one other trend line here is the breakout. This break even will be important. I think it's enough, and we already saw enough examples. I ask you to go through the chart, analyze a few candles, like or change the time frame to see what will you see, and analyze each candle, like imagine the price movement during that period of time, then try to find support and resistance, then after that try to draw these trend lines and find break-evens. Do it even if you feel that it's wrong. Do it if you are doing it wrong. Just draw something on the chart. Don't care now about being correct or not. It's important just to draw. We are just learning very, very, very super basic stuff. We're gonna in the future learn exactly where we have to draw this break event, which trend lines are important, which support and resistance zones are important too, not all of them. So for now, we are just learning basic stuff. So don't care, don't mind if they are wrong, if they are correct or not. Just draw it, do exercise on it, try to find them on the chart, to get used to watching the chart, drawing something to in the chart, using these toolbars and go through different symbols, like for example Bitcoin here. If you double click on this, the chart will be okay. Go to Bitcoin chart, for example, which is Bitcoin, BTC, Ether, or it's a cryptocurrency which is always $1. Ether is dollar, or other things like ADA or Cardano, which is a cryptocurrency. Okay, I hope you go and find this support and resistance zone on the chart in different time frames. I hope it's useful for you. I wish you the best. My name is Khosrow Sokhanvar, trader and investor in financial markets.